today's version of dividend paying whole life is much different than our grandparents. You can structure policies to accumulate cash value extremely rapidly so that you can begin to borrow against that accumulation on demand on your terms to take advantage of high caliber opportunities, particularly in real estate, where you can multiply capital without ever interrupting the daily growth of your own supply source of money.
Welcome to the Xplor Show, where we dive into the worlds of entrepreneurship, real estate, and motivation. Each week, we bring you inspiring conversations with people who are exploring new frontiers and shaping the business world. Thank you for tuning in. Now let's get to the show. Hey, welcome back to the Xplor Show with Scott and Ryan. Scott, as always, good to see you.
Ryan, good to see you as well. How you doing today?
Doing good. Excited for this episode.
Yeah, same here. And to get straight into it, today we've got Jayson Lowe. Jayson's actually north of the border up in Canada. He is a life insurance guru at Ascendant Financial, owns and operates Ascendant Financial. Jayson, welcome to the show.
It's a pleasure to be with you. Thanks for having me.
Yeah, absolutely, Jayson. Let's get right into it. So tell us a little bit about life insurance and why life insurance is a good product for everybody to have. Let's start there.
Oh, wow. First of all, it's a really good question. I think that when most people hear that term, life insurance, they think they have to die in order to win.
Yes.
And so it's not particularly the most appealing conversation to have at a dinner party. But what so many people are unaware of is all of the financing characteristics that are available if you're utilizing a particular form of life insurance contract, which is a participating dividend paying whole life insurance policy. And like we touched base on briefly before hitting the record button on the show, you said, I really want to have a good conversation about how this can be applicable to real estate investors who are either A, just getting started, maybe B, want to amplify their existing portfolio. They just want to radically improve anything that they're already doing from a real estate investment perspective. And this tool is a perfect fit. And real estate investors pick up on this and grasp this very quickly. But generally, overall, life insurance in general, it just has a very applicable use, but it's not just for addressing a financial need at death. It's far more advantageous to look at all the financing characteristics and all the living benefits that you can take full advantage of while you're alive.
And let's dig into that a little bit more. So what's different between what this specific policy that you're talking about right now and a policy that we hear on the radio, life insurance? Dave Ramsey always talks about buy term, don't buy whole, whatever else. Why is this policy better maybe than another whole life policy?
That's a really good question. And firstly, to address what a Dave Ramsey would be communicating, he's addressing a very specific demographic of people, and he provides the very best advice I think that he believes is true and best for people to implement in their lives. But what's really interesting is that when you look at whole life insurance, that maybe would have been what I refer to as maybe our grandparents' version of it, Dave Ramsey would be entirely accurate in his description to say, you know what? This type of policy takes a very long time to accumulate accessible cash value, but you'd be far better off taking today's stronger money and putting it toward maybe investing in something, whatever that something is, because there's a higher probability that you're going to do better going down that track than the other route. Whereas today's version of dividend paying whole life is much different than our grandparents. You can structure policies to accumulate cash value extremely rapidly so that you can begin to borrow against that accumulation on demand on your terms to take advantage of high caliber opportunities, particularly in real estate, where you can multiply capital without ever interrupting the daily growth of your own supply source of money. And so
are you saying I could double invest my money essentially?
No, that's actually a common misunderstanding I think that people have when, if you're familiar with the process that we specialize in, that we've been specializing in the past 16 years, and that's the process of becoming your own banker, the infinite banking concept. It's a process that is often sensationalized, and it doesn't have to be. It's
Yes.
ridiculously simple. So when you hear terms like get your own dollar doing the work of $2, that's completely incorrect. When you put money into a dividend paying whole life insurance policy, you begin accumulating cash value the very same day that the policy is conceived. That cash value is guaranteed to grow on a daily basis. It cannot go backward. It can't be repossessed. There's no economic scenario or political turmoil or tax situation or stock market volatility that's going to take any of that accumulation away. And then when you want to take advantage of a high caliber opportunity, you're borrowing the life insurance company's money while your cash value continues growing inside of the policy. And another big misconception, something that people don't understand, most frequently who I talk to day in and day out, including advisors, and I talk to advisors from across North America every single day. Cash value is not actually money. People throw that term around and they say, you've got all this cash growing in your policy. No, you don't. You have cash value. That's why it's named and characterized properly as being value. It's not cash. It's equity that's accumulating in the policy that you get to use as collateral on demand on your terms. So let's think about this from a real estate investor's mindset. Have you ever met a real estate investor who has said, you know what? I'd be really frustrated having ready access capital on demand on my terms to take advantage of really high caliber opportunities. I'd rather go through lengthy, nosy credit applications, personal guarantees, all of these hoops that you have to jump through. And it gets even more difficult the larger your portfolio becomes, when it should, in fact, be the complete opposite. So when you begin to implement this concept in this process, but you understand that it's meant to be achieved gradually and incrementally over a period of time, it opens your eyes to a whole new financial world. And when that
Let's talk.
happens, high
Yeah,
caliber
sorry.
opportunities find you.
No, I love it. And
In-
yeah, I couldn't agree more. And just to throw it out there, I have multiple infinite banking policies, a whole
Yeah.
life insurance policies where I do leverage and invest in real estate, invest in all types of opportunities. So I am, yeah, I know you do. We talked, 2 weeks ago in Colorado, and you have quite a few policies. Let's talk a little bit more though. So a minute ago, you mentioned the risk. I don't remember exactly what you said, but essentially it's not risky. How is that? So we always hear about these companies that go bankrupt, or just recently, several banks have collapsed.
Yeah.
Why is this different? How is it different?
Oh gosh, that's, again, your questions are awesome. And to share again with your audience, you didn't preempt me on anything. I had no idea
No.
what you were going to ask me, but your questions are really good. So let's just examine history for a second, okay? Without putting anybody to sleep. Let's take a look at what's happened over the past century plus. We've had a number of really horrible recessions.
Yeah.
We've had the Spanish flu, the Great Depression, the tech bubble bursting, H1N1, SARS, COVID-19, the financial crisis of 0809, to name a few. And yet life insurance companies have always been and currently are the most financially solvent institutions on planet Earth. That's not a coincidence. That's an engineered outcome. And I'll give you a little bit of context as to why that is. When you co-own a life insurance company, as you do, you've indicated you already have policies in place. You co-own a company that has never failed to produce a divisible surplus profit. The reason that has occurred is not by luck, it's by engineering. Everybody on the show has heard of the term life insurance. You've heard of that before?
Absolutely.
Okay, let's just follow that path of logic for a second. I'm going to sell you a term life insurance policy for $1 million. You'll be covered for 10 years. It renews every 10 years automatically without any medical evidence of insurability. And I'm going to sell you that policy for $20 a month. Now, I'm the insurance company. Do I believe for 1 second, do I have any notion or belief that you're going to die within that 10-year window? Not at all, because that would be a very horrible way to operate a business, wouldn't it?
Exactly.
But yet you're purchasing that policy. So you're betting against me. You're betting against me. You're saying, I think I'm going to die in that 10-year window. So I want to get that $1 million for $20 a month. And that's why less than 2% of term life insurance policies ever pay out a death claim, because you know what happens as people get closer to their projected mortality?
Price goes way up.
And what do they do with the policy?
They get rid of them.
They surrender it. And do they get back any of the premiums they've paid into that policy for the past several decades?
I am not aware of any term
Not a
policies
chance.
that pay back.
And so that gives life insurance companies one line item of cash float, a lot of money. And they need to put that money to work, because money that isn't moving isn't worth anything. So they're putting that money to work, not for the term life insurance policy holders. They're putting that money to work for you and me, the participating whole life policy owners. We're the sole beneficiaries of all the divisible surplus that the company we co-own creates. And then let's put this into perspective. You mentioned you're aware in your country in particular, you've had a large number of regional banks, a large number of maybe smaller, let's just take away the big 5, the big 7 banks. These are banks that have failed. During the financial crisis, you had several hundred banking institutions fail. Not one life insurance institution failed, not one. And so they create this enormous cash float. They put capital to work. The insurance company itself contractually guarantees the outcome to you and me as participating policy owners. So let's just tap into our logic for a second here. We have more than a 200-year track record of that phenomenon occurring. What's the probability, high, medium, or low, that phenomenon is going to change in the next 90 days?
Pretty low.
The next decade?
Yeah, very low.
The next quarter century? And then ask yourself this question. What have I thought more about today, dying or money? Go ahead and answer. I'll put you on the spot.
I cannot answer that.
And what do you think
I haven't thought about either.
What do you think you'll be thinking more about 10 years from now, dying or money?
Yeah,
Money,
essentially.
And so we have an insurance company that provides a unilaterally binding contract that is guaranteed to accumulate cash value on a daily basis. You pay no tax on that buildup, by the way. There's no stomach churning ups and downs of markets. I like to ride an elevator that only goes straight up. I don't like the roller coaster. And every day that I age, my net worth goes up and there's no market risk involved. And then I get to borrow against that accumulation, and I control the repayment schedule of the money that I borrow, and I co-own the lender. And then when I die, my family pays no tax on the windfall. Knowing all of those things to be true, which they are, how much of your capital do you not want residing there? Just thinking logically, if you're going to build your own warehouse of wealth, and then from that warehouse of wealth, you get to control how you finance all the things that you do in life, including real estate investing. So the other misconception is that it's an either or. Should I put my money in real estate or become my own banker? Should I put my money in Bitcoin or become my own banker? Should I put my money in stocks or become my own banker? Private equity or becoming my own banker? You're missing the point entirely. You can't get a better rate of return doing anything if you ignore who's controlling the function of banking as it relates to that thing you want to do. Isn't that good?
So yes, you explained that very well. Actually, one of the best explanations I've heard put out there ever, I think. So a couple of things. Number one, social media has really made this infinite banking concept a lot more well-known, I would say, in a few years. Would you agree with that?
Oh, absolutely. Yeah. We post to social media.
They sensationalized it.
We post 332 times a week.
Oh my gosh, that is a lot. No, I was going to say, I've been seeing a lot of your posts recently, but that makes sense because you post so much. That's awesome. The problem though, the problem I have with it, obviously, like I said, I have infinite banking policies, but it's been very sensationalized. I can't say the word, sorry. Sensationalized, and it made it to be something that it really maybe isn't what some of these influencers are saying it is. They sound, from what you're saying, it sounds almost too good to be true. If I'm being honest, as a guy that's not in the life insurance industry, I have policies. It took me a year plus trying to figure out why this wasn't real, if I'm just being honest with you.
Yeah, and you know why? You wanna know why?
Oh, I do.
Because whoever presented it to you began with the solution, not helping you clarify a deep understanding of the problem.
And
And
actually, somebody just recommended the Black Book to me. Nelson Nash, that was what it was. They said, hey, you should just read this. I don't know how many times I read that thing back and forth, trying to pick through it and just say, this can't be true. It can't be true. And then finally one day I said, you know what? Maybe it actually is true. And we've just been told and programmed to believe that it's not true by very famous, popular people that have huge followings. And you know what? Back to Dave Ramsey real quick. I think he has what he does is great for a certain niche.
oh, yeah.
And it gets people to a certain point. But
Yeah.
I think once you get there, okay, what's next is the way that I looked at it.
Oh, for sure. And that's a really good way of looking at it, because when you understand what's really going on, you'll know exactly what to do. And this gentleman that you see here, for all your viewers who are watching, maybe on
Love
the
this.
YouTubes. So R. Nelson Nash, the late R. Nelson Nash, I was blessed beyond the definition of good fortune to be mentored by him for so many years. And I think about him, I miss him every day. I had a documentary film commissioned on Nelson that people can view at nelsonnashfilm.com. Again, that's nelsonnashfilm.com. It's a 1-hour documentary. It'll give you a deeper glimpse into the essence of just how brilliant he was. And the reason I commissioned that film, and there will actually be an additional 40 plus hours of footage that is going to be released gradually here over the next year or two, that will show you, you'll hear directly from Nelson on all of his perspectives, expanding on the books that he wrote, the most prominent being the book titled Becoming Your Own Banker. This book it has sold more than 550,000 copies. It is self-published. He also wrote the book titled Building Your Warehouse of Wealth. And the reason that I express my sincerest gratitude to Nelson every opportunity I get is because he was just so generous with his time, his wisdom, and his knowledge. And I'll share with you something that is so fundamentally important to understand. Your money must reside somewhere. And this process of becoming your own banker is not meant to be sensationalized. There's a term that gets used often. In fact, you've used it yourself. I have infinite banking policies. There's no such thing. The infinite banking concept is a process. It's not a product. Yeah. And I think where the sensationalization comes into play is when people try to lead with, let me describe to you all the advantages of the tool that's used to get the job done. And people get very excited about all the living benefits of this tool, all of its financing characteristics. But yet when I ask everyone that I speak to, can you take a moment and just describe to me the problem in your own words? Take your time. Nobody in the past 16 years who had not yet come through any of our education, any of our live or virtual events or anything like that, even after having read the book, Nelson could not cram all of his wisdom into a 92-page read. And I would ask people the question, describe to me the problem in your own words, take your time. And people simply cannot do it. Here's the problem. Yep. You're doing all the work and everyone else is getting all your money.
Bam.
Is it not true that at present, all of your money is flowing through the books of someone else's bank? Is that a problem? Absolutely. Let's explore the solution to the problem, because once you understand the problem, the solution will become clearer and you'll know exactly what to do. And there's no sensationalizing required.
So then some of the questions and feedback I've heard, and actually a question I believe that I had back when I was starting all of this, if the bank has my money, isn't it essentially the same thing as the insurance having my company or my money? I'm sorry, the insurance company having my money.
Thank you for sharing that. I haven't heard that much personally, but thank you for sharing that. So the insurance company cannot inflate. And so the fundamental truth is that your money must reside somewhere. And so you have a choice, right? You can store your money on the books of someone else's bank. So you and me, let's presume for a moment that you and I owned a Publix grocery store together. Would either one of us ever buy our food from Walmart?
No,
Why?
because I would support my own business.
Thank you. So you want the financial energy, the money, to reside somewhere. What better place to have it reside than on the books of a business that you co-own, and where that business cannot inflate? There's a big difference between a commercial bank and a highly regulated life insurance company. That company cannot inflate their money pool. And when you have money flowing through the books of a commercial bank, and you're even worse, especially for our real estate investor listeners, you're borrowing from that commercial banking system, you're part of the problem, because
So
you're
you're saying
driving.
go ahead. I was going to say, so you're saying you own part of the insurance company if you have these policies.
That's right. Yeah. If you're set up, ideally, your policies structured with a mutual company, so there's no stockholders in the equation. The participating policy owners are the sole beneficiaries, the sole co-owners of this entity that has never failed to produce a divisible surplus. So if you want to go into business, do you want to be in a business that has that kind of track record? I certainly hope so.
It seems like a safe place to store your cash.
Isn't that good? I
It
don't
is very good.
I don't know of any documented instance, because none has ever been brought to my attention, where a participating policy owner has lost capital.
Yep. Now, let's explain this a little bit, though, so listeners understand. Why is it different? If you don't understand how a bank works, banks can leverage your dollar. So every dollar put in, they can essentially leverage, I think it's 99% of that dollar out. So you put a dollar in, they could go and then loan out 99 cents on that dollar that's in their hands. Okay. With an insurance policy, it's a 1-to-1 ratio, is it not? They have to have $1 cash for every dollar in policies. Is that correct?
Yeah, there has to be an asset on the balance sheet that can be redeemed for cash to lend you the money. Whereas banks create money where no money existed before, and they cannot do that without depositors leaving real money there. And then when you borrow money from that commercial bank and they create that money where no money existed before, what are you paying them back with? Real money, which permits them to create more money where no money existed before. And so that makes you a part of the problem. And it's not your fault. You're doing everything that mainstream advice led you to do. It's not your fault. There's a solution to the problem. And if you can contract with other like-minded people who are trying to solve a common economic problem, which is ready access to capital, and you're doing that inside of an entity that possesses all the attributes that I just described, then logically you would ask yourself, how much of my money do I not want flowing there? We have 76 policies in our family banking system.
Wow.
We don't rely upon a commercial bank for anything other than the convenience of debit. And I'm here to tell you, from a place of authenticity and integrity, that is a very peaceful, stress-free way of life financially. And when I am presented with a high caliber opportunity, i.e. something in the real estate space, first and foremost, it has to meet my investment criteria. And if it meets my investment criteria, I can take advantage of that opportunity much faster than the individual who needs to go to private lending or to joint venture or to a commercial bank to get the deal done. I pick up the phone, I call the life insurance company, I request a policy loan. They ask me two questions. Do you want the money electronically deposited into your bank account, or would you like us to mail you a check? There's no credit checks. There's no income verification. There's no questions about what I need the money for. There's no questions about when and how I'm going to repay it, because the lien for the loan balance is on the death benefit of the policy that's used as collateral. And the reason the insurance company doesn't request a repayment schedule is because the insurance company itself is guaranteeing the collateral for the loan. And you co-own that lender. And
it's
loans command interest because capital always has a cost. And interest is profit. And profit is a net contributor to the earnings of the insurance company that you co-own. And so a fatal error in thinking is that infinite banking has anything to do with interest rates. It's all a matter of where the money's flowing to and who it's being put to work for and for how long. Isn't that good?
It's amazing, yes, and I want to clear up a few things. So we've talked about term policies, we've talked about whole life policies, dividend paying whole life policies. They are not all equal.
No.
Okay, so obviously term life, we went pretty into depth on that. Very quickly,
Yeah.
can you explain the difference in maybe not complete difference in whole life policies, but what's the difference between the policies that you're talking about and other policies that we hear about maybe a lot in media, or a lot of big companies sell whole life, but there's a lot of negativity on whole life because of some of these other policies that have been issued in the past, still are today.
Yeah, I think what I would say is that in terms of the varying degrees of how a policy can be engineered and what the life insurance companies themselves offer, there's so much flexibility there. So a policy could be designed where there's not rapid cash value accumulation. And it's not that policy is good or bad. It just is. It has its own set of characteristics. And for the purposes of becoming your own banker, a policy of that nature would not be suitable. But if a person maybe had a different purpose or a different objective in mind, great, that might be the solution for them. But you can design policies that are the complete inverse, where you've got very high, rapid cash value growth. And for someone who wants ready access to capital on demand on your terms to implement a process, that would be the most suitable way to design the policy. And so I think it comes from a place of, I think, in the media and maybe in the advisor community, where people are trying to sell against something versus matching the right product to solve the right problem. And
Yes.
that's what we do. I don't sell against anything. If somebody approaches me and says, "Hey, I've got option A, I've got option B. Can you tell me why option A is better than option B?" That's the wrong first step. Can you tell me what you want either option to accomplish for you? And let's start there. And then let's just check the box and make sure that it has all the attributes to achieve that objective. If it doesn't, we're not looking at a suitable product for you. It's not that it's wrong, but people get so polarized. Oh my
Yes,
God,
they do.
that is just an awful product, or that is the best thing before sliced bread. And when you compare it to this is horrible. It's like, how is that even remotely productive in
Yeah.
any conversation that you're having when you're actually trying to serve somebody?
No one product is good for everybody. Right?
Exactly. Every financial product out there just is.
Yeah.
It has its own set of characteristics in terms of liquidity, guarantees, control, volatility, accessibility, tax treatment, and so on. So that's why it's so important to evaluate what you desire as the best attributes, and then make sure you work with somebody who's experienced and who can really help you do that. Because if the advisor only has a hammer, every problem looks like a nail.
Yes, it does.
Isn't that
That is
good?
very well put. That is good. What is the rate of return? A lot of people sell the wrong rate of returns with these insurance policies. And then others will say, why would I put my money in an insurance policy when I can only make X% and I could put it in the stock market and make double that? Let's talk about that a little bit.
They're missing the point entirely. The process of becoming your own banker has nothing to do with rates of return. It's all about controlling how you finance the things that you will absolutely need throughout the course of your lifetime. That's it. If a person is stacking up a participating dividend paying whole life policy against investing in the stock market, they need an immediate psychiatric evaluation. They don't need to be talking to me about rates of return. What you're doing is you're putting your money somewhere because it has to reside somewhere. And in your country, the total cash value is contractually guaranteed to match the total death benefit of the policy by age 121 of the life that is insured. In Canada, it is age 100. Thinking in terms of ridiculous simplicity, cash follows the leader, and the leader is the death benefit. If you want more cash, make sure the death benefit keeps growing and the premium can't go up. That's simple. Every single day that you age, your cash value is growing. That's it. And when you have somebody like a Susie Orman or a Dave Ramsey saying you should not do this, isn't it interesting that the people who need the death benefit the least are the ones who buy the most? Shouldn't that tell you something? So if Dave Ramsey went into a commercial bank and said, listen, I want to get you on my show because I think that you're all idiots for putting so much money into bank-owned life insurance. And I want to tell my millions of listeners how stupid you are, Wells Fargo, JP Morgan, Bank of America, all of you bankers who have been around a lot longer than I've been alive. I want to tell you how dumb you are for putting money into these instruments. Has Dave Ramsey ever had an episode on that?
Nope.
Because he has no earthly clue what he's talking about. And
Well, what's funny,
he's paid handsomely to not know.
exactly.
And so remember, everything begins with the way that we think. And all due respect to Dave Ramsey and what he does, like it's not a personal slant or anything. It's just the truth. He just simply does not know and recognizes that he's paid very handsomely to not know.
He's a damn good marketer.
Yeah, for sure.
I mean,
Credit to him for that.
Genius.
Yeah. But you know what? People don't care about what we think about Dave Ramsey.
Exactly.
People want to know and need to understand the problem. And then once we present a solution to that problem, all I can tell you is from firsthand experience, 16 years specializing in this process, being mentored for so many of those years directly from the pioneer and developer of the process, who rarely gets credit where credit is due, I might add. But yeah, I will tell you, I have never had once a single client of mine call me and say, Jayson, I'm really ticked off that my cash values keep growing every day. It's really frustrating me. I'm super upset that I've had ready access capital to take advantage of some really high caliber opportunities. I've been able to eliminate debt much faster than I could have done otherwise. I'm on a path to a very peaceful, stress-free financial way of life, and it's really bothering me. That's never happened. You got to be doing something right.
Something's going right. Yeah. So when it comes to investing in real estate, let's say, okay, let's talk about how the policies are structured to a point. So how does a real estate investor, say you've got $50,000 sitting around that you want to go buy a rental property, and what would you advise somebody to do in buying a policy in this situation? Or how does it work? How could they leverage that cash to get a policy and possibly get that property?
I would encourage them first and foremost to stop thinking transactionally. You're going to need the use of money for the rest of your lifetime. We want instant gratification, everything. I want to go buy this property. Show me how to become my own banker and do it in the next 30 minutes. I'm double parked. I've got somewhere else I need to be. Like,
it's a long term. You got to be thinking long term.
You got to be thinking 3 generations past your own.
Yeah. And
you've got to realize the truth. You're going to need the use of money for the rest of your lifetime. It'll take the average person 20 years to get the banks out of their lives permanently. So if I have a real estate investor who's had one too many Red Bulls and wants to talk to me about becoming his or her own banker tomorrow afternoon, I'm just going to let the person know I'm simply not well suited to work with you, because you're always going to be thinking transactionally. This is about taking control of this banking function as it relates to your needs, not to one transaction. So the first thing that I would do is I would advise that person to sit down with an authorized infinite banking practitioner and to explore the problem, to discuss the solution that's not going to only address that one transaction, but help set them on a path to become their own banker, to truly achieve that. And again, with all the sensationalizing that's going on out there on the TikTokers and the Instagrammies and the Facebooks and the YouTubes, you will never see any content of ours that senses the message. Yet we attract thousands of people every single year. And what they tell us is that we feel like you're actually talking to us, right? You're not describing how you can get rich buying cars or how you can make your money do double the work and all that other nonsense, which simply is not true. It's just not true. And you can steer people astray with half truths as well.
Yeah.
What we do is we describe the process the way that Nelson engineered it and pioneered it. And it hasn't steered us wrong. And our clients are simply raving fans.
Yeah.
We have
So you're
thousands of
saying
five-star Google reviews and people sharing their
authenticity
experiences.
still works.
Yeah, it sure does, because I'll never forget one of the first things that Nelson said to me. He said, Jayson, I want you to know this message is ridiculously simple. It's not meant to be sensationalized, so don't ever pervert yourself. And I'll never, ever forget him saying that. And when people are out there doing that, it's coming from a place of enthusiasm. Most often, they're really excited about the process. And maybe they've learned something that isn't true and they're just repeating that, and they feel like it's true and it's accurate, when in fact it isn't. It just isn't. And
Yeah.
I would encourage people, make sure that you're working with an authorized infinite banking practitioner who can demonstrate to you how they're implementing the process in their own life. And that should serve as rocket fuel for your own imagination to say, wow, gosh, now I can see how this can be applicable in my own life. But look, people want more control. They want more of their money working day in and day out, uninterrupted, never calling in sick, never forming a union, never complaining about anything. The money's just working. There's man at work and money at work. You want your money at work. You want to pay less tax, and you want to be in a position where you wake up each morning and your net worth is greater than it was when you went to bed the night before, even when people are screaming and hooting and hollering all over CNBC, talking about how the sky's falling, go buy a hard hat, all that other stuff. I don't worry about any of that nonsense. I don't need to. And people tell us that's what they're looking for. And we provide it to them. And then from that place, they can go and take risk if they want to do that. If you want to go invest in the market in private equity or whatever, go do that. But realize that your own aquarium of capital is going to continue growing every single day uninterrupted, and you're going to attract no tax. And when dividends are declared, which they get declared once annually, once they're declared, they're contractually guaranteed to be paid. They can't be repossessed. They can't lose value. And when you chunk them right back into your system, you trigger no taxable event. What a peaceful, stress-free way of life that is financially.
Yeah.
Isn't
No,
that-
it's great. And it is real. The reality is you just got to understand and actually try to learn something new, get rid of some programming that you might have had in the past. And I'm here to say I've seen it, I do it. And Jayson is awesome. He absolutely crushes it in Canada. And actually, Jayson, tell me if I'm wrong, but you guys just opened shop, or you're opening shop here in the US?
Yeah, we began operating in the United States in January, which we're very grateful and very honored to do. I lived and worked in the United States on an international work assignment when I was a senior partner with Dell. And I lived and worked just south of Tampa in Riverview and developed amazing friendships. I loved working and living in the state of Florida. No state income tax. I remember getting my first paycheck after I moved there, and I called my boss and I said, something's wrong. You paid me. And he said, there's no state income tax, you dummy. And living there, I'm a capitalist. I really do love America. I think that it really is a land of opportunity, and I mean that sincerely. And we've had so many people through our podcast, through our YouTube channel. Our podcast up in Canada is Wealth Without Bay Street. That's Wealth Without Bay Street. Our YouTube channel is Bankers Vault. Again, that's Bankers Vault. We post content to it every single day. And
guys, links will be put onto the show, just so you know.
Thank you sincerely. And more than 26% of our viewing and listening audience are American. And so they were reaching out consistently going, hey, we know you're headquartered in Canada, but can you point us in the right direction? And
that's a lot of business.
My goodness. I met with my team. This was midway through last year. And I said, look, how many more times do we need to be asked this question before we realize there's a significant opportunity for us to serve? The infinite banking concept, the process of becoming your own banker, it doesn't recognize any borders. So let's serve the people. And so we went through this whole process of, oh my God, you guys would get a chuckle out of this. Department of Homeland Security, the FBI,
I could only
like
imagine.
fingerprints. And I said, look, what else do we need to do? And so we had to invest a little bit of capital, which I'm more than happy to
Yep.
do, to make an investment in your country. And
Did you use a bank or your policies?
really good question. What do you think the answer is?
Your policies.
Policies. And so LifeEva was born. So we don't operate as Ascendant Financial in the United States. We operate as LifeEva because there's already a company named Ascendant operating in the US. And so we
Yeah.
didn't want any brand confusion. So we operate as LifeEva, and we're proud to serve Americans. And anybody in your listening audience is welcome to connect with us. We'd love to hear from them. And we're just transferring all of our knowledge and experience. And so far, it's been absolutely incredible. You know what people have been telling me, and I've been speaking at events in the United States since January. The most common feedback that I get outside of, hey, I really found this extremely valuable, I want to take the next step. People are telling me, I've heard about this infinite banking concept before, but nobody's ever explained it to me the way that you have.
Yeah. No, you simplify it. So I heard you speak while I was at the same conference as you a couple of weeks ago in Colorado.
Yeah.
I mentioned to start the show and heard you speak for, I think you only got 15 minutes or so. But
No,
I
it was
said,
about an hour. It was an hour.
oh, did you speak for an hour?
Yeah.
Everybody else got like 10 or 15 minutes. So I was pushing people through. Yeah, you did get a longer session, but still 1 hour. I said, this guy knows what he's talking about. And he knows how to relate it to real life situations versus just trying to sell something. There was no selling done in the entire presentation.
Not at all.
Awesome.
And I'll tell you firsthand, and we share this with any prospective client that we meet with, we're the buyer, not the seller.
Yeah, I like that.
Because in any transaction, the only party to the transaction that gets to do any rejecting is the buyer.
Yep.
And so we decide whether or not we have a basis to work together, and that attracts the people that we most love to serve. And we're just very blessed and grateful to put ourselves in a position to do that. And people tell us, the feedback that we get is, you know what? Nobody's ever said that to me before. And it just really amplified your confidence that you've got a solution to my problem. And it's, you better believe it. And when we take you on as a client, believe me, all the ongoing coaching and mentoring, the quarterly group client coaching sessions, the client portal with 24/7 access to all of our resources and archived quarterly client coaching sessions, the one-on-one sessions, everything that we do is because we have a deep understanding of what exactly it is the clients we have and the clients we want to have truly value. And you know what the shocker is? We actually deliver on it.
Yeah, I think being authentic really works. Being authentic, it works. And that's what I tell people all the time. Stop selling, start helping. Be authentic, figure out what they really want. And then it just happens. And the reality is, I don't sell real estate. I'm here to advise people, help you figure out what you're truly looking for. And that's all I can do. Authenticity works. Plain and simple.
So good. And I'll tell you this. So I always love to pay tribute to mentors because I'm not solely responsible for my success, and neither is anyone else. I'm the sum parts of everyone who mentors me. Later on, Nelson Nash, Joe Polish of the Genius Network, Dan Sullivan of Strategic Coach, etc. And within those wonderful groups, there are billionaires. And I've never met a billionaire yet
Gives everything.
who hasn't told me that he or she achieved that degree of financial prosperity by doing anything other than taking control of this function as it relates to their needs, investing in real estate, and buying businesses.
Love it.
Those three criteria. And it's just so frequent. It's, hey, what tipped the scale for you to become a billionaire? I got going in this part of my journey, my business, my niche, whatever it was. Then I started taking control of this function as it relates to my needs. And then I started investing in real estate. And then I started acquiring companies. Never made the mistake of operating them. I hired people to go and do that. And so for us, we're coaching our clients to do the very same thing gradually and incrementally over a period of time. And so for all your real estate investor listeners and viewers, just imagine that day when you've got a great opportunity And the last person you're even thinking of calling is the commercial banker. You're calling someone at the insurance company that you co-own to help you get into that deal. Isn't that good?
I love it. No, that is awesome. I can't wait for that day to be here. Yeah. Jayson, I know you're on vacation and I appreciate you so much coming on the show. If there's anything you have left to say, I think you've dropped your YouTube channel, your Facebook, everything. Is that right?
Yeah.
Or is there anything else? Awesome. We will get links, guys. Thank you so much for listening. Jayson, again, thank you, man. This was awesome. We will definitely stay in touch and send anybody that reaches out to us your way.
I'm honored. Thank you so much for having me. And thanks to your
Yes.
listeners and viewers for tuning in.
All right, guys. Talk soon.